Hello and welcome back to Explain the Charts. Today, July 15th, 2025, we're analyzing EURUSD, combining both news and technical analysis. Recent headlines indicate increasing trade war tensions between the US and EU, with President Trump threatening tariffs, causing market volatility. We'll be examining how these events are reflected in the EURUSD charts. Let's start by examining the daily chart to get a broader perspective. We can see a period of choppy price action over the last several months. The overall trend has been downward, but we've seen some brief rallies. The recent news regarding tariffs seems to be exacerbating the downward pressure, pushing the price lower. Now let's take a closer look at the 1-hour chart to pinpoint more recent movements. We see increased volatility and a sharper decline in the more recent candlesticks. This coincides with the news of Trump's tariff threats, suggesting a direct correlation between the news and price action. Zooming in further on the 15-minute chart provides even more granular detail. We can observe short-term reversals and fluctuations responding to the latest headlines. These rapid changes make scalping or day trading strategies potentially profitable, but also increase the risk. Looking at the support and resistance levels, we can see immediate support around 1.1650. A break below this level could trigger further declines. Resistance is currently around 1.1700, which EURUSD has struggled to break in the short term. The one-day chart shows resistance around 1.1780, which is the level to break if EURUSD hopes to have a bullish reversal. Considering the overall macroeconomic landscape, the outlook leans bearish for EURUSD in the short term. The trade war fears and the comparatively hawkish stance of the Federal Reserve relative to the ECB are weighing heavily on the euro. However, a sudden shift in trade negotiations or a dovish turn by the Fed could trigger a rally, especially if EURUSD can decisively break above 1.1700. In the long term, FX Street analysts suggest a potential return to parity between EURUSD is possible, which is around 1.0000. While this may not happen immediately, the macroeconomic conditions favor a stronger dollar over the euro. Keep an eye on German snap elections. Political uncertainty in Europe can pressure the EURUSD. To recap, key price levels to watch are support around 1.1650 and resistance near 1.1700 in the short term. A break of 1.1780 on the daily could signal a potential bullish reversal. The most likely scenario, with about 60% likelihood, is continued bearish pressure due to trade tensions and central bank divergence. Look for opportunities to short EURUSD on rallies. However, be prepared for a potential rally if trade talks improve or the Fed changes course. Monitor news closely and trade accordingly. Remember to manage your risk.